Morning all, and welcome to Meridian's quarterly operating results call. I'm Mike Rowan, I'm CFO at Meridian, and sitting with me virtually is Owen Haxton, our intrepid investor relations manager. This is the regular call where Owen and I share some thoughts and insights into the last quarter. We do it semi-annually in between the interim and annual results to provide a little more colour and context to the operation of our business. Format's pretty straightforward. We'll mix and match commentary on a bit of climate, hydrology, generation, wholesale prices, consumption, retail operating costs, and I might throw a couple of tidbits in there if there was anything interesting from an operating perspective as well. But given it's a general update, we'll steer clear of the financial data and financial results. If you've got questions, anyone who's participated or listened to us previously, you'll know that there's about a 20-second delay between what you hear and what we see. So if you do have questions, make sure you drop them in early so that we don't miss them. If there are any questions, I will talk to them at the end of the spiel. So first up, I'm going to hand over to Owen.
Thanks, Mike. And I'll talk about the weather actually. And look, while our collective memories of summer may be fading, it did prove to be both a warmer and drier summer than average, with temperatures above or well above average for most of the country. The exception in that was western and southern parts of the South Island, but nothing outside of normal. And really low rainfall saw a large swathe of eastern parts of the country in near drought conditions by the end of summer. In contrast to that, there was a lot more rain through the central North Island and in western and southern parts of the South Island, driven by more prevalent westerly winds, which is one of the defining characteristics of the prevailing El Nino conditions that we have been in. And then autumn started, and if it felt like summer ended quickly, it did. March 2024 proved to be the coldest March in 12 years. And NI would describe an unusually cold month as a month where the average temperature is more than half a degree below its historical average. And March was one of those unusually cold months. And in fact, it was the coldest unusually cold month in over 10 years. That's another way of saying in all of the 10 years, the coldest month to its historical average was the March that we just went through. And the cold conditions were driven predominantly by southwesterly wind flows, which can be a characteristic of a waning El Nino weather pattern. And that's the outlook that we have in place for the rest of autumn and into winter. An easing to neutral El Nino is expected to bring normal rainfall levels and temperatures through autumn and winter. From a hydrology point of view, the contrast between the El Nino conditions experienced this quarter and the La Nina influences of last year were evident in our inflow totals. This Q3 was something approaching average, and it was 22% higher than what we recorded as inflows in Q3 of last year. However, and to highlight the rainfall variability you get in weather patterns, last week saw a major inflow event into hydro catchments, with South Island and national storage quickly rising back to average levels, which puts us in a very good position fuel-wise approaching this winter. Between the 9th and the 14th of April, nearly 900 millimetres of rain was recorded at our high altitude rain gauge near Aoraki Mount Cook. Our main storage lake in the Waitaki Lake Pukaki has risen more than 1.7 metres so far, and it's still rising and is forecast to exceed average over the next few days. Our Waiau lakes are now at high storage levels, and there's a series of smaller weather fronts in the deep south arriving this week, so we should continue to see Lake Manapuri and Te Anau levels rise. All of that supported strong Q3 generation volumes, and in fact it was the highest Q3 generation numbers in the last 4 years, which broadly ties in with the last time we saw an El Nino prevalent Q3. And average prices through Q3 of this year were high too, 35% above what we experienced in the same period last year. And Michael talked to wholesale prices in a bit more detail shortly. Finally, from me, just to touch on system demand. That was the other really strong number we saw in Q3 of this year, lifting over 4% on the same period last year. Thirsty agricultural regions saw double-digit demand growth, off the back of higher irrigation load. However, provincial and urban demand was stronger too, likely lifted by a combination of summer cooling and then March heating load. Look, it's also worth remembering that Q3 last year did see electricity supply interruption in the North Island from numerous serious weather events. What does that mean? Well, it's always hard to pick through the layers on demand, but overall it feels like there's positive growth in and amongst those other seasonal factors, and we think that's pretty encouraging. With that, I'll pass it back to you, Mike.
Hey, thanks, Owen. There's no question that Q3 weather was a little kinder to southern hydro catchments this year compared to last and the one before that. The 900 mils of rain is always appreciated. Hey, as Owen mentioned, the quarter did see high generation price capture for us. You would pick that up in the operating report for Q3, and you see it coming through futures as well, as the futures curve did lift over the quarter as hydro storage kind of drifted below average during the quarter. Of course, that's changed now, but longer dated futures also rose over the quarter, and always hard to know what drove that, but we do sense that ongoing uncertainty around the future of existing gas supply continues to manifest itself in those longer run futures prices. And there's a lot of conversation out there in relation to gas supply. Most of it seems to focus on deliverability, and in fact deliverability decline. You see the production from most of the main gas fields are falling, and that's despite the completion of investment programs at those fields. So we will wait and see. I don't know if people have a tremendous amount of confidence in the capacity of our either storage or production facilities at gas from a long run perspective, and that looks like it's showing up in those long dated forward curves. And while there's plenty of reference made to tight winter supply this year, the rain that both Owen and I mentioned means that hydro storage is at a pretty good level, and the production and capacity additions that we have seen and been able to drive into our business, alongside a couple of demand response provisions that I'll talk to in a bit, with NZAS production at Harapaki and Tauhara certainly feeling like things have eased a little bit in the short term. From a retail perspective for us, another great quarter, 8% lift on volumes over the quarter with 6% higher price capture. The volumes were driven by agri. Drier in the southeast and northeast of the country meant that volumes certainly in our portfolio lifted quite materially. And Owen mentioned earlier that alongside the lift in residential and small business customers within our book drove the volume lift over the quarter. That compares to corporate industrial volumes that were actually pretty stable. One thing that's not there that may be of interest is the team, I've talked to it a few times, is the team has focused on extending the duration of contracts in that C&I segment. And jump back probably 4 or 5 years ago, the average contract length or duration in our book was about 2.2 years. That's now just over 5 years. And we've done that on purpose to manage risk, but also to help customers who have been challenged by the higher wholesale prices and forward curve. If I jump to OPEX, hopefully it's no surprise to see the lift in quarterly OPEX. We guided to a full year range at the interim result release of 276 to 282 million for the full year. Just as a reminder, that was driven by higher REM across the business. IT and insurance costs had lifted, and we were and are investing into our retail business. So hopefully that doesn't come as a surprise. And nothing for folk on CapEx. Again, at interims, we updated the full year CapEx guidance. We dropped it to 345 to 370 million. And, assuming we land a couple of land purchases that we're focused on, we're on track to land inside that range. I mentioned I might talk to a couple of other things as well, and first couple focus on Rio. Really good to see NZAS enter into a new peak demand response agreement with us, covering the 12 weeks over winter, or covering 12 weeks of winter 2024. And for those who don't remember it, that's an agreement that allows us to ask Rio to reduce consumption for 4 trading periods, or a couple of hours a day, or 20 trading periods, or 10 hours over a fortnight, to reduce peak pressure on the electricity system over peak periods. And that sits alongside the demand response agreement that we entered into with NZAS back in 2023, that allows us to ask Rio to reduce consumption over a longer period of time by up to 50 megawatts. And interestingly, we exercised the 50 megawatt agreement in March off the back of a couple of transmission outages in Southland that were potentially going to cause a spring washer effect, which would have been particularly unhelpful for us and consumers who were caught by that spring washer. So that agreement is already helping, even though we exercised it under unexpected conditions. Hey, we talked about Manapōuri transformer outages at the February results announcement. The main transformer, or one of the 2 transformers, has been repaired. It's being reassembled as we speak and tested, and it'll go into a period of soak, which will last through June. All going well, we should have 6 units back at Manapōuri and operational as winter kicks in. And I mentioned earlier that turbine installation at Harapaki is going well. It's going brilliantly. Both Owen and I have got backdrops of Harapaki. Mine's a little earlier in the piece than his. You can see that magnificent crane putting turbines up, whereas Owen's had a nice cloud cover with a couple of turbines poking above the cloud. But the key point beyond the photos is things are going well in terms of the construction. If anything's slowing them down, it's wind speeds over the last month have been reasonable. So they've had a few days where they haven't been able to do much, but they're making good progress. And it's a reminder for us that the wind resource up there is superb. Hey, now that's the end. That's come to the end of the kind of spiel. So I'm going to move to questions. I do see that we've got one, but if anyone has any others, make sure you drop it in now, because there is that 20-second delay. And if you could throw your name in to the question, that would be great, so that I know who the question is from. I will move to the first question though. It's from Grant. I reckon that's Grant Swanepoel. Hope it is. If not, apologies to Grant. The question was the surprise cutback of the HVDC link, and And was there any negative impact on March profits or March financials? The simple answer to that is no. So, HVDC Link, there was a major outage that spanned, the best part of 3 weeks. It was well signalled. We'd set our position up and to manage that. Probably the only impost from a operational perspective is the Southland transmission outages that I mentioned, but they were for a period of a couple of days. None of the above or that had any impact on our financials for March. And I reckon that could be it. So, hey, quick thanks to everybody for joining. Hope you found it useful. Owen's obviously available outside of this for anybody who's got any questions. Loves taking those questions and informing people of our business. But for now, we'll sign off. Thanks.